price action in terms of silver, obviously it makes no sense given that we've got surging inflation, that silver would be down 16 days in a row. Markets generally don't behave in that fashion.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we dig back into the economic and silver market events of our day, which some days it feels like pounding on a day-by-day basis as we're recording Tuesday night ahead of CPI on Wednesday morning, where silver has declined 16 days in a row. Although, fortunately, to help make some sense out of that and let folks know what's going on in these markets, we have John Adams here, who many of you have heard of. And John appeared on the gold and silver scene. I guess you've been doing this for a while, although quite a popular figure, especially duking it out with Kitco. I know you have a debate coming up later this year with Jeff Christian, which what else can we say? But John, chief economist at As Good as Gold Australia and also Adams Economics. So John, great to have you back on the show and welcome on in. How are you doing today?
Very good, Chris. Thank you for having me back.
Well, I appreciate that. A lot happening, and certainly, gee, you wonder if the proverbial blood is on the streets in the silver markets. We've had 16 declining days in a row, not easy for people to handle, and a lot of frustration and despair out there, which I can frankly understand, and we will dig into that. Quick note before we get started. Today's show is sponsored by Steve Cope and the kind folks over at Silver Viper Exploration Company, and recently have found anomalies at surface and at depth which were positive, which they're excited to drill into later this year. And thank you, Steve and Silver Viper, for bringing us tonight's show, where we can discuss this silver price that I think a lot of us think one day will eventually go higher because, you know, the last couple inflation prints, 8-9%. John, I don't know, this will probably air after tomorrow's is released. I don't know if you want to take a guess at it beforehand, but at least leading into that announcement, this is just a thorough drubbing by the banks on the silver price. So why don't we just take it right from there? What have you been seeing? I know you're following the order flow on over there in Australia, so anything that you could comment on there, I'm sure folks would be excited to hear.
Sure. Yes. So I think there's going to be a lot of interesting action that's going to happen tomorrow your time. So obviously you said, Chris, it's Tuesday US time and it's Wednesday morning here in Sydney. So only in the last few hours did President Biden come out and have a specific press conference about inflation. So obviously the administration knows that tomorrow's news is pretty bad, and that's why the president was trying to get ahead of the story by having this press conference. So if I had to take a guess, I think it's going to be north of 10%. And obviously, once you hit double-digit inflation, according to obviously the official measure, which we know is rigged, and if you look at John Williamson shadow stats, the real number is probably north of, who knows, 17-18% in terms of inflation. So yeah, if we're drawing parallels back to where we were in the 1970s, we're probably at the level of inflation that Americans were facing back then. So I think the president's in a lot of trouble on inflation. The media and these American people are pouncing on him, and obviously the administration, as well as the Jerome Powell of the U.S. Federal Reserve, is trying to put the best picture on the inflation story as we head into the U.S. midterms in terms of November. So now, in terms of the price action in terms of silver. Obviously, it makes no sense given that we've got surging inflation, that silver would be down 16 days in a row. Markets generally don't behave in that fashion. Craig Hemke has made some specific comments in the last 24 hours, as well as Peter Schiff, and a lot of their analysis seems pretty sound. I mean, the only thing you could potentially say that's driving commodity prices lower, as well as cryptocurrencies and stocks, is the existing rate rises and the expected rate rises coming from the U.S. Federal Reserve. But So there could be some short-term volatility. Ed Stee wrote an article for his subscribers last week saying that the COT report was extremely bullish for silver. So in the last couple of weeks, the big four shorts at the COMEX have been reducing their short position by a substantial amount. So when you see that sort of action, plus potential CPI action. I mean, Bixby just did a video saying that on previous days when the CPI was released, silver and gold went for a bit of a rally. So I think things are lining up quite well in terms of a short term in terms of rebound, in terms of the price of gold and silver. Now in terms of where we go from here. Now I wrote an article for my website back in early February. And so my medium-term macroeconomic forecast is ongoing stagflation, and so I think the macroeconomic environment is very positive for silver. And the reason why I have that view is that one of the central reasons why we had the global financial crisis in 2008 was because Greenspan and Bernanke raised interest rates too high, and it led to a systemic crisis in subprime mortgages that led to Bear Stearns and Lehman Brothers, but ultimately collapsing in terms of 2008. And so ever since the GFC, the central banks around the world have been very cognizant not to repeat that sort of phenomena. And in the process, we've seen a massive explosion in money creation and in terms of the expansion of credit and debt. And so there's a limit to how much central banks can tighten monetary policy to the point that financial institutions potentially could become unstable. And I would point to two factors. One is that at his recent press conference, Jerome Powell basically said that the intention of the FOMC is to raise interest rates subject to economic conditions and financial market conditions. And that caveat basically says that we're going to raise interest rates up until the point that the financial markets become too volatile. And then we're basically going to pivot, and we're going to start in terms of pausing and then going into a loosening campaign. But only in the last few days did the US Federal Reserve publish a report talking about financial market stability, and they raised concerns about liquidity in the market. So they haven't even really begun the fight against inflation, even though it's the number one political issue in America. And they're already talking about caveats about financial market stability, issues with liquidity. So there is, in my view, no possibility. Look, the ultimate question about silver, in my view, it's not economics, it's politics. And the political question you have to ask yourself is the power structure. So when we talk about, the Wall Street banks, Washington, US Federal Reserve, regulators like the CFTC, are they going to allow the system to collapse upon itself and cause the greatest depression in the history of humanity? And the answer, in my view, is that all indications is the elites are not suicidal or kamikaze. They're not going to crash the financial system and basically put themselves into bankruptcy. And so that's why I think there'll be some rate rises coming forward over the next few months, up until the point that consumption starts to fall off a cliff, and financial institutions start to become volatile. Then they'll pause, then they'll pivot, then they'll start to cut rates again. We should see a resumption of quantitative easing. In terms of Australia, our commercial banks have been instructed. So there was a specific instructions from the regulator last year to prepare for negative interest rates. I think negative interest rates are coming in Australia around 2024. So I think as we go into the second half of next year, into 2024, inflation is going to be even further out of control beyond where we are now. And in that environment, I think, at least in the macroeconomic context, it's a perfect environment in terms of gold and silver. So I'm very bullish on a medium-term forecast, but obviously, subject to that, we have the issue of market manipulation, which no doubt you've spoken a lot about, and I've spoken a lot about in terms of different contexts. I mean, you tend to focus about COMEX and the CFTC. I'm more focused around problems and fraud in the physical market, fractional reserve skins, unallocated, pool allocated. But I think there's a lot of problems in the both in the physical market and the derivatives markets that need to be resolved if we are to break $30 US per ounce.
Yeah, well, you mentioned the CFTC, and certainly I'm a big fan of Rosti. Although it's interesting when you think about how this Fed market policy is affecting things. I mean, it's not really all that different than what the CFTC is doing in silver, where it's like, if they move policy one way, the stocks go up. They move policy the other way, the stocks go down. It seems almost cartoonish when you take a step back and think about it. And John, I know you had thoughts on how silver is actually priced, but I mean, is that fair to, I mean, I guess you touched on it when you said these are political markets. Is that fair to say that, hey, whoever's influencing the Fed one day or another, I mean, find out what the Fed's going to do and how they're going to manipulate things. When so much is based on these guys who are front running their own policy, it seems like there's a detachment from any sort of true supply and demand. What would you say to that?
Yeah, yes. So I mean, yes. So I mean, I have no doubt that policymakers, whether it's the CFTC or in terms of the U.S. Federal Reserve, are they rigging the market? And like, I mean, I would 100% agree with that. But where I think, I mean, and obviously, I think American analysts like yourself have a particular focus on the CFTC and the COMEX because these are American organizations and institutions. And obviously, we know that the COMEX basically is the arbiter of this in terms of the spot price. But when I think about this whole scheme, and how can the average retail investor try to break the scheme? I mean, the reality is that I don't think, if we're going to be realist and pragmatist about this, there's little hope to real reform of Wall Street or the CFTC or how the COMEX actually works. The only way, in my view, that we can actually bring justice to the silver market is, rather than attacking the market from the top down, it's actually addressing the market in terms of the bottom up. So now, for example, Craig Kemke only did an interview in the last 24 hours where he basically said that there is a detachment between the paper derivative price and the physical market, but at some point, if there's enough tightness in the physical market, that's ultimately going to have an impact on the paper price, and it's going to squeeze what that price could happen. And obviously, we just saw that in a big way in terms of nickel, in terms of the London Metal Exchange, where there was, there was just a lack of available physical nickel, and then the price went up 500% when there was a huge squeeze. So the question then becomes well, how best to put pressure on COMEX. And obviously we can't do it through Washington and New York because the powers that be don't want to listen to people like you and me. So now, only in the last week, for example, Ronan Manley from Bullion Star wrote an excellent article about order practices in terms of Lebanon, in terms of their gold reserves. There's been some other articles in the last week about Denmark and missing serial numbers, etc. So I think we're starting to see more and more situations and examples of problems in the physical market. So whether it's about order practices, integrity of storage, in terms of problems around redemption. And so obviously you and I, Chris, did a number of interviews in March of last year where we were questioning the practices in terms of the Perth Mint. And you had Richard Hayes, the former CEO, coming out saying, we have 60 tons available for sale. There's no problems with availability of silver. It's just a problem of manufacturing capacity. And yet when people in Australia wanted to buy some of that 60 tons, the Perth Mint wouldn't sell to any of them. Now, you and I haven't spoken then probably in terms of on camera for about 12 months. But I mean, you were calling out Richard Hayes quite aggressively, so was I. And what happened in October last year? He was ceremonially sacked by the board of the Perth Mint for basically systemic operational failures. And so the Australian Financial Review, which is Australia's equivalent of the Wall Street Journal, wrote an article saying that Richard Hayes basically burnt $100 million on an IT platform that basically didn't perform, and that the board had lost confidence in his ability to manage the Perth Mint. And so that wasn't the only scandal. So the fractional reserve scandal, the inability to redeem consistent with their contract, the IT issue. Back a couple of years ago, there was a major scandal in terms of integrity of supply chains, in terms of getting gold out of Papua New Guinea. And there's all sorts of a whole host of other issues that have been surrounding the Perth Mint. So the fact that Richard Hayes last year attempted to go on Kiko News and try to provide confidence to the market and to the customers of the Perth Mint, I thought his performance was quite woeful. He was asked point blank, how many unallocated, pool allocated customers do you have? And he couldn't answer that question, which is you'd think for a CEO of one of the world's largest mints, it's a very elementary question, and he wasn't across the detail. So the Perth, so Richard Hayes is gone, and there's a new sheriff in town. Now the interesting thing about the Perth Mint, I'll say, is that my sources here in Australia tell me that what the Western Australian government has done is they've actually picked an experienced bureaucrat who has no previous history in precious metals to take over the Perth Mint and to steady the ship. So there was obviously a lot of concerns about Richard Hayes, his background in terms of involvement with a number of banks around the world. Apparently, he used to work for the Rothschilds Bank, etc. So he had a very interesting legacy, which would raise questions about some of the operational practices, gold leasing, and a few other things that he was involved in. But it looks like we've got a clean skin coming into the Perth Mint, and so far the Perth Mint's been pretty quiet. I think that there's a lot of internal improvements that they're going to do. Now, with COVID-19 and everything, I haven't been able to travel to Western Australia, but I'm hoping at some point this year that I can get to go across, and I wouldn't mind sitting down with government officials and people, maybe even visit the Perth Mint and get a feel for what's happening out at Western Australia. But there's definitely reform afoot in terms of the Perth Mint, but yeah, coming back to the central point is, in terms of you and your listeners, in terms of me and sort of the clients that I speak to, the ultimate question is, how do we crack $30? Because it's been stuck. We know there's a price ceiling at $30, and with all the macroeconomic conditions on the table, that shouldn't, that makes no sense. So I think we have to squeeze the COMEX from the bottom up, and the only way really to do it is to focus on integrity problems in the physical market, and there's a whole host of maneuvers and attempts across the world to bring those sort of issues to the fore, including even in terms of the Australian Parliament. So only in late March did an Australian senator confront the Reserve Bank of Australia about our country's holdings at the Bank of England, and audit practices and integrity, and how do we know that all the gold's there, and that there's been issues around fake gold bars and duplicate serial numbers at the Bank of England. So a lot of these issues are now surfacing, and hopefully that there'll be sort of more reform effort in that area, that we can actually improve truth and transparency in the physical market, and obviously get to a real baseline figure as to how many physical ounces actually exist in terms of what the investment demand is, in terms of what the investment demand is, and how much real physical silver actually exists. I think only in the last fortnight you did a show about the Silver Institute saying we had record investment demand in 2021, we've got more investment demand in 2022, and yet the price is going lower, which makes no economic sense. So there's a lot to be done in this market to bring the price to its real fair price. But I think what people like you and me need to do is to rethink what is our approach, and is attacking the COMEX and the CFTC the most effective way, and if we can't beat them, is there another way to skin the cat?
Well, I hear you. That's what I spend a lot of my waking hours thinking about. How can you make an impact in an ethical and moral way, not resorting to anything that a banker or a Perth Mint executive would think of. And again, I appreciate, on a side note, you mentioning that about Dick Hayes, because I think it's sad more than anything, but just to the degree that I'm not like sitting around here attacking people because they have nothing to do, but there is a lot of inappropriate stuff going on, and appreciate that update and phrasing it like you did, because it's unfortunate. I hope the guy is well, and we'll perhaps leave it at that. Although I don't know if we've talked about this on air though, because as you mentioned, you have people who are looking for the honest, transparent market. And then, of course, playing defense against that, you got Ross the Boss from the CFTC. I was stunned when I happened to come across this yesterday. I mean, the headline is just special. CFTC won't hesitate to change the rules if needed. Thanks, Ross. We already knew. But John, let me play just a couple seconds of Frosty in action here. And I mean, let me just play and you can see what you think about this one.
What's been a decent sell-off in the last few days?
Yeah, I mean, we've seen obviously markets move quite significantly in the past few months, settle over a period of weeks, but now some more volatility. So we're keeping a close eye on it, obviously making sure markets are transparent, fair, and that pricing is reflecting supply and demand. And I think that's the key issue that your viewers should take away, and it's my number one responsibility is to ensure that pricing is fair and responsible and also reflecting supply and demand. And as we see these moves.
John, how does that make you feel to hear this man say that he wants prices to be fair, supply and demand, all the stuff that we'd love him to do? What say you to that?
Well, I mean, the only thing that I will say is that, I mean, American credibility on a whole host of fronts has collapsed. I mean, we probably can't speak about it on YouTube too broadly, but in the last week, Dinesh D'Souza, the American conservative academic, has just released a fascinating and stunning documentary that I would recommend that people go and watch. I won't talk about what it is because YouTube may have a problem with it. But I mean, when I was a kid back in the 80s, America was the shining beacon in the world, with Ronald Reagan leading the United States, and America, to a large degree, was trusted and was seen as a credible world supreme power. Whereas now, Americans know how to talk the talk, but people across the world just have lost confidence in terms of the statements coming from the American administration. So, I mean, even the last month, shocking story that Saudi Arabia refuses to take the call of President Biden. And so, I mean, Saudi Arabia has been a partner with the United States since the 1970s, and every American president has enjoyed a strong relationship with the Saudi royal family. But now they won't have a piece of Biden, and obviously Jerome Powell has huge integrity problems in terms of his statements around fighting inflation, but yet he's not getting on top of the issue. And then obviously, those involved in the commodities complex and precious metal markets. I mean, everyone has a view. I mean, even the surprising thing, Chris, was Kitco News last week broadcast an interview with Frank Gistra, who basically previously he said that gold was managed. Now he's saying out and out gold is manipulated. And it's very unusual for Kitco News to even touch that subject, but it's so obvious how corrupt these markets are that even Kitco News is broadcasting that sort of content. So the CFTC can talk about these things and say all the right things, but they have absolutely no credibility. And one thing I will say, which is quite fascinating, which to be honest, I haven't dug a lot into, but I'm going to look into it later this year and see how this phenomenon continues. Rob Keen from Gold Silver Pros did an interview recently stating that a number of countries are starting to reinstitute their own futures markets or commodities trading systems independent of London and New York. So I think the French have reinstituted a gold trading system in Paris. And no doubt there'll be other I think the UAE in the Middle East want to establish their own trading system, and no doubt other countries around the world. So we've had for decades, ever since 1974 when the CFTC and the COMEX was created, the Americans and the British leading these markets through a concentrated trading system, and now you're starting to see a whole bunch of countries wanting to break away from the US dollar and the US federal and the reserve currency status that it enjoys, and basically come up with alternative trading platforms that is not so corrupt in terms of its paper to physical ratio, and that could actually serve as a more fair and transparent pricing mechanism. So the only thing I'll say to Ross Burnham and the CFTC is that while you talk the talk, market participants around the world no longer believe you, and people are moving in real time to replace the supremacy of the COMEX and the CFTC. So he's just, to be honest, digging his own grave, and that phenomena of regional trading hubs and regional future markets around the world, I think that will continue going forward, and it's just another example of the decline of American power.
Yeah, I completely agree. I think it's really tragic in the end that someone like me who left the country twice because of that. I know other people are email me and ask me what it's like in Mexico. It's just sad in its own way. And either case, though, last one before we wrap up, John. I know that you've been involved with the bullion side in Australia, and again, anything you could touch on. I know people like hearing what people are doing on the physical level, especially here in the U.S. What have you been seeing there in Australia in terms of physical? Are people still buying? Are they scared because of the recent price decline? Are they selling, or what kind of order flow have you been noticing lately?
Yeah, in terms of not only in terms of as good as Gold Australia. There's a few other sort of bullion dealerships that I have a conversation with. So I would say, late 2021, early 2022, there was a lot of strong demand, and funny enough, a lot of Australians responded to what Justin Trudeau did in Canada. So when Justin Trudeau put on restrictions on bank accounts for the truckers, that spooked a lot of Australians, because a lot of Australian investors look at international examples of how economic freedom is taken away by various governments, and people think, well, if the Canadians can do something like that, well, what if the Australians were to do something, and what does that mean if my life savings is in the banking system and I have no physical protection or physical wealth or any type of physical insurance? So I think even though we've seen weakness in the price, there has been ongoing demand. I think a lot of investors are now waking up to how this manipulation scheme operate. So while the price does come down, rather than people liquidating their position, and I know in the last day or so you did an interview with Andy Sheckman, and he said that the order flow is slowing down, but no one is selling. I would say in the last few weeks that's probably the same thing that we're seeing here, but there's still enormous appetite for precious metals. But a lot of it has been driven not necessarily about the price rallying or rising inflation, is actually financial risk, and how various governments implemented the COVID-19 management policies, and what are the implications from that. And Justin Trudeau had a huge shock to the psyche of a lot of investors, and that's one of the big factors that investors came to us and say, we want our money out of the banking system, and we want physical insurance. And no doubt as we go forward, I think some of those things will continue, but hopefully, at least in the short term, we're going to see a bit of a rally with the release of the consumer price index tomorrow morning in New York, and then we can obviously try to repair some of these losses that we've faced for 16 days in a row.
Well, I sure hope so as well, although I guess perhaps it's a learning experience, whether the price goes up or down, knowing how you feel, whether you're doing something for the short term or the long term, which at least if you can take that step back from the long term, at least makes, for me, the decisions a bit easier. But in either case, that's something everyone has to decide for themselves. Although, John, a lot of helpful information you're sharing these days. Can you let folks know what's the best way to keep up with the things you're doing? And also, how can is there like an email list where they can stay tuned so they don't miss the Jeff Christian, John Adams, Silver Bull Bash? Because it sounds like fun. How can people find you, John?
Sure. So yeah, Twitter, my handle is Adams Economics. People can join me there. I've got an Adams Economics group on Facebook and Telegram. I have a website, adamseconomics.com. I have a sort of free subscriber newsletter that people can sign up to, and I provide people in terms of updates. And my main YouTube channel is I do a show in Australia called In the Interest of the People with my co-host Martin North, where we talk about economic and political controversial subjects. And yeah, so I took a break for about 10 months working on something else, but we're now back in full steam ahead. So hopefully we'll we'll have the opportunity, Chris, to have a few more conversations in the next few months as we go forward.
Yeah, and maybe one day I was looking up at this. I'm like, wow, silver 30.86. Maybe we'll get that in U.S. dollar pricing right in Rusty's face at some point. So, John, I appreciate what you're doing. I know you've been duking it out with Kitco and putting up with some of their nonsense. And I think that takes courage to do some of the things, speaking of about the things that are going on, and because often they do try and bully people financially. So again, folks, you can find out more about John and the great things he's doing at adamseconomics.com. And also one last thank you to Steve Cope and Silver Viper. So if anyone is looking for some potential exploration exposure, you can check them out at silverviperminerals.com. And with that said, John, great to catch up with you again. Glad to see you're doing well. And I know you'll have more developments this year, and we'll have to do this again soon.
Thank you, Chris, for having me.